Well, Bhanu Baweja is Global Head of Emerging Markets, Fixed Income Currency and Credit Strategy at UBS. He joins me now. And Bhanu, before we get to Egypt, I just want to ask you about emerging markets. Just take a look at things a little more broadly, because we just had some breaking news. China raising its key interest rates by 25 basis points in an effort to rein in inflation. When we look at emerging markets right now, not just the Middle East, but everywhere else, it's all about inflation right now, right? That's what is increasingly driving financial returns.
Indeed. I mean, you've seen emerging market assets underperform developed market assets for the better part of the last 2.5 months, precisely because investors are getting worried about inflation. And there's reason to, right? This is a world which is obsessed with demand. We are trying to stimulate demand through monetary policy, through fiscal policy, and all of a sudden the aggregate supply curve shocks us, right? So food price inflation, increasingly oil is becoming an issue because of the Middle East. And I think many central banks will have to wake up and smell the coffee. Their policy settings are very, very loose. There has been no mid-cycle slowdown. In fact, it was a very brief one, and since then we've seen a re-acceleration in global economic growth, and food prices, oil prices are going higher. So all three combine to give, make for serious inflationary pressures, and many central banks are a long way away from normal.
And when we look at the political unrest that we've seen, not just in Egypt, in Jordan, Algeria, Tunisia, there is also the prospect of these protests spreading even further afield. Food prices, a major dimension of this story. Are we going to see food prices continuing to rise? 2011, what's the outlook?
Well, the outlook for food is one that says that they could rise exponentially from here if we were to see another shock, i.e. there's no buffer right now. The food prices are typically extremely volatile. We are looking for them to continue to go up in the very short term. We are looking for oil to stabilize out here. The point, however, is that if there is another supply shock, food prices could go up not in linear fashion, but in an exponential fashion, and that will really hurt, not just the Middle East region, but also global inflation in emerging markets in a pretty big way.
What about the role of seasonal weather patterns in driving up price movements? Can we expect inflation to subside as it gets out of the way?
Well, we've seen aseasonal weather patterns, which is what has led to where we are right now. So La Nina has lasted for longer than most people thought. And that's why I don't think we should be fading food price inflation anytime soon. In fact, as we speak, the prices of wheat are still going up. The prices of oil have begun to rise, which is a bit of a worry, because typically oil leads food price inflation. And so if now oil increases in terms of year-on-year growth levels, you will see food prices getting a second leg up, which will be quite worrying.
What about domestic inflation pressures?
Quite strong, because if you look at ex-food, ex-energy, core inflation in many emerging markets, and China, incidentally, is not one of them, but core inflation in many other emerging markets is rising. You are seeing inflation trickle down from food to wages. Labor markets in emerging labor markets are still pretty tight, and that's why I think central banks need to pay attention.
Right. So what should they be doing? How is this going to impact developed markets, the US and Europe?
Well, the first thing they should be doing is stop obsessing about the currency. I don't know whether they will do that because it is political, but I really don't think there's a currency war. I think it's a minor currency skirmish. The real war is the domestic inflation war. So they should look to normalize interest rate policy. They should look to let their currencies appreciate modestly so that imported inflation can come down. Unfortunately, they're doing exactly the opposite of that. They're just focusing on quantitative policy, i.e. hiking reserve ratios, and they're looking to keep interest rates low. And that could mean that inflation comes back and snaps up pretty high in the next 6 to 12 months. That is a pretty big risk.
And what is this going to mean for political unrest?
I think, the old pointers are that the dynamic in the Middle East is one that, has been hitherto underappreciated, and that you could see places like Jordan, Libya, Algeria. That's a worrying sign, right? I mean, all of Middle East and North Africa minus GCC. Not because we're not worried about food inflation in GCC, but GCC has enough fiscal reserves to contain the situation. MENA ex-GCC doesn't have the fiscal reserves. So we've seen news in Jordan and we've seen news in Algeria. These places are at risk, which does mean that there could be a Middle East premium even in the oil price, and that will be worrying again for the food price outlook.
Right, Bhanu Baweja, Global Head of Emerging Markets, UBS. Great to talk to you. Thanks so much for coming in.